Welcome back to Wise Strategies. Today, we've got an exciting topic to dive into: Forex trading. If you've ever wondered what it is and how it works, you're in the right place. Stick around, and we'll break it down for you in simple terms. So, what exactly is Forex trading? Well, Forex stands for foreign exchange. It's the global marketplace for buying and selling currencies. Think of it as the place where different countries' currencies are traded, like the US dollar, USD, Euro, EUR, Japanese yen, JPY, and many more. Why is it important? Now, you might be wondering, why is Forex trading so important? Great question. Forex is vital for various reasons. It helps businesses manage currency risks, travelers exchange their money, and even governments stabilize their economies. How does it work? Let's simplify how Forex trading works. Imagine you're planning a trip to Europe, and you're from the US. You'll need euros for your expenses. So, you exchange your US dollars for euros at the current exchange rate. Forex trading is pretty much the same, but on a much larger scale. Major currency pairs. In Forex trading, currencies are traded in pairs. Some common pairs include EUR, USD, Euro, US dollar, GBP, USD, British pound, US dollar, and USD, JPY, US dollar, Japanese yen. When you trade these pairs, you're essentially speculating on the price movement. Will it go up or down? Participants. Who participates in Forex trading? Well, it's not just big banks and institutions. Individual traders like you and me can join the Forex market through brokers. These brokers act as intermediaries, allowing us to trade currencies from the comfort of our own homes. Leverage. Now, here's something important to know. Leverage. Leverage allows you to control a larger position with a relatively small amount of capital. It can amplify your profits, but it also increases the risk of losses. So, use it wisely and make sure to understand it fully. Risk management. Speaking of risk, it's crucial to have a risk management strategy in place. Never invest more than you can afford to lose. Start small. Use stop-loss orders to limit potential losses, and gradually increase your trading size as you gain experience. Analysis. Successful Forex trading involves analysis. Traders use two main types: fundamental and technical analysis. Fundamental analysis looks at economic factors and news events, while technical analysis studies price charts and patterns. Combining both can provide a solid foundation for decision-making. Demo accounts. Host. If you're new to Forex trading, consider starting with a demo account. These accounts allow you to practice with virtual money, so you can get the hang of it without risking your hard-earned cash. And that's a wrap on our quick guide to Forex trading. Remember, Forex can be rewarding, but it's not a get-rich-quick scheme. It takes time, education, and practice to become a successful trader. So, if you're interested, dive in, learn, and always trade responsibly. If you found this video helpful, don't forget to give it a thumbs up and subscribe for more informative content. Have questions or topics you'd like us to cover in the future? Drop them in the comments below. Thanks for watching, and we'll catch you in the next video.